Hello and welcome to the Wolf of Future Street. It's still a weekend, but we are pressing on with making new videos. And here is the latest one. It's how to build a trading strategy. One of the other $1 million questions that we all traders have. So, onwards and upwards. What is a trading edge? That's the question that we need to address first. The markets are random, as we are all told every so often, and our job is to find something unique in the randomness. If things are random, how do you find something which is not random, right? Well, not random are these triangles. Yeah, they are random to everyone else but you, and that's your edge. That you see triangles where no one sees them, uh, and when you see them, you press buttons. You buy, you sell, you make money. What's a better way to kind of put that? A trading edge is, in a simplistic language, a pattern that's clear, a pattern that repeats, and a pattern that you see often. Depending on whether you're a swing trader, a scalper, or a long term investor, you can see patterns every few minutes, every few hours, or in days and weeks and months. But a trading edge is simply said is a pattern that you can see. And you can see and you can press buttons and you can make money. Right? Unfortunately, in the pursuit of patterns, most of us traders keep on confusing in terms of what patterns really are and keep hopping between one pattern and the other, thinking that we are actually chasing strategies. Trading strategies are way different from trading patterns, and we'll come to that later. But all I want to say is stop hopping through patterns, indicators, and things like that. All of them are useful, but the moment you slow yourself down, you can possibly see better patterns. And here is a way to frame your mind and frame your actions to figure out patterns in a random cloud of candles. And what I'm suggesting here is something that has worked for me. It may not work for you, but you can try it out anyways. What I did was I started looking for price action through candles, Heikanashis, the price ladder. If anyone knows them, Jigsaw is a good tool. I've seen price through multiple other forms. The profile to look for patterns across the profile. I also have seen footprint charts looking at delta to see if there are patterns there. You also have to see multiple time frames. A minute chart plus a 5 minute chart plus an hourly chart plus something else, or an hourly chart plus a 4 hour chart plus a monthly chart. But it is important to have a multiple dimension of the time frame that you're looking at. You also need to look for at least an average or two, a moving average or two. I would say stick to one. If you can't, then have two. But don't fall for the trap of crossovers on the moving averages. They are useful, but that's not a pattern. Or right, I have not found a pattern using moving averages the way others may have. So, as I said, this is my experience. And use some indicator that is commonly used. Don't try to do any fancy business here. Stick to the standard ones. Uh, and see if the indicator can help you filter out the noise that sometimes happens across your charts. And I would say there's no point in me actually rambling about trying to find an edge without giving you any practical understanding of these four aspects that I just talked about. So let's look at the charts and I'll show you how you can possibly find a pattern. Mind you, before I go into this chart, I want to call out that this is not something that I follow as a trading strategy or a pattern. but I'm just demonstrating here a way to identify patterns. And as I said, I'm looking for multiple time frames across my standard candlesticks. So this is a 1 minute chart, got a 5 minute chart, I got a 15-minute chart, and to add a small variation, I got a 2000 tick chart. We'll stick to the minute charts, or the 1 minute, 5, and the 15 for the time being. And I have one moving average on this chart, which is the 200. This is the 200. This is the 200, and this is the 200. And of course, this is the 200 here on the tick chart as well. So we have got multiple time frames, one single moving average line, and we have an indicator on the 1 minute chart. We'll come to this. It's a MACD. It's 2x of the standard MACD settings. Go figure. Right. So if you look at this chart, all I'm trying to do is see price action through these lenses. Lens on the 15-minute chart tells me that price is hovering above the 200 all the time. It hasn't even touched the 200. On the 5 minute, on the same aspect, I can say that price momentarily came below the 200, came below the 200 at the open, and then sprang back up, just like, it's just gone back to where the 15-minute chart was or has been through the day. On the minute chart, the opposite is true. I see more move below the 200, then finally reclaiming the 200 perfectly and then going up. So basically what it means is the 15-minute is all green, the 5 minute after the open, or should I say, let's define a time frame. So at the open, the 2 minute came down, sorry, the 5 minute came down below the 200 for some time, but then has remained above the 200 since the open. And which means that it would be useful for the 1 minute to show some brotherhood with the 15-minute and the 5 minute chart, or show some confluence. And that basically is a possible pattern that we have identified here, just using the 200 EMA and 3 different time frames. Now, I've also said that you can use moving averages and in combination with indicators. So here is the magic of the indicators to, as I said previously, reduce the noise. So you can see here that right here you have a green arrow, a green candle, which was trying to pierce the 200 and join the 5 minute and 15 minute, right? And we would have entered there possibly, and it would have taken us out. And this is where the indicator comes in handy, the MACD in this case. You can see that when it happened here, the MACD was red. And then the next time around, when it actually went back up again to the 200, the MACD said, I think you should join this, move on the long side, go long, and figure out where you want to exit, right? But that, using the multiple time frames, the multiple or the same moving average, and an indicator as humble as the MACD, which is often abused, is a possible worthwhile way to find an edge. Again, this is not an edge that I have uh, used. I don't have a backtested or a forward tested strategy around this particular process or this indicator or this edge. It is not a proven edge of mine. It's just my way of showing that there are building blocks to your edge, which you can utilize to figure out a way to trade the markets. Finally, I want to also differentiate between an edge and a strategy. People often tend to confuse with regards to what with the trading edge and a trading strategy. And here is the difference. A trading edge is nothing but your identified pattern, a pattern that repeats, and then you can see them. You can see those patterns, and you can be confident that yes, they happen every so often. A trading strategy, on the other hand, is where your pattern is just the beginning of the trade. Once you see a pattern, you enter on the pattern, A strategy then basically tells you where can you get in and out on your profit targets, and if it goes wrong, where should your stop loss be, and where should you get out of this trade. Obviously, I'm going to discuss the strategy or the trading strategy and the way you should formulate it over the coming videos. But I thought it was a good start to tell you what a pattern or a trading edge is, and how can you start identifying those patterns using simple building blocks. I hope you like the video. Please do subscribe to my channel. Please do like, and more importantly, please do share your feedback. That's more important. So please send in your comments. I'll be very eager to listen to what you have to say. Thank you.